Good afternoon, VV Nation. Welcome to Trending Thursday. My name is Ryan, your host. Always a pleasure. Now, hopefully I set the alert right. Should be coming out in just a moment. We'll give everyone a moment to make their way into the room here. As you can tell by the background, going to feel pretty bullish. And if you have access to the VectorVest software, you can see the optimism on the homepage. We got 3 green lights across the board right now. Therefore, the color guard is bullish, and we're always going to advocate buying safe, undervalued stocks that are rising in price. Now, just looking at the major indices, what's leading the charge? No surprise, we got the NASDAQ here, right? Up over 1%, but even looking at the Dow Jones here, it's close to 1%, 0.9. And if we take a closer look to the broad market, examining the VectorVest Composite or VVC, up over 0.5%. So I like the enthusiasm that I'm seeing in the market right now, especially as the World Economic Forum continues to unfold this week. Let me check, make sure the alert hit. There it goes. Perfect. We'll give everyone just a moment to make their way into the room. Now, yesterday on afternoon market action, I wanted to really educate you, and we went into the diamond top head and shoulders pattern in the Qs, right? Not coming to fruition. Didn't want to put it, too much bearish out there. Just wanted to, teach you and show you some cool technical indicators that you can utilize, especially when we broke out to the bottom end of that diamond. But sticking with our proprietary market timing indicators, the DEW is still up. The primary wave is up right now, and the confirmed call is up. CD Drive, yo Ryan from sunny Arizona. Now, I will say I'm already getting sick as the ice is moving closer here to North Carolina. Started feeling pretty rough this morning, but I noticed Friday night, Saturday morning, looks like our snow forecast kind of fading away. But it definitely looks like the ice is coming. Should I plan an exit for CLS? Remind me, Ruben. We can take a look at CLS. We can take a look at it. Jerry says, don't chase. Don't chase. All right, Joey, let's take me over to the software here. We're going to jump in. You got the homepage right behind me. But again, showing optimism in the market right now. As far as the top industries, media, newspapers, still leading the charge. It's been in the top 5 off and on now for several months. There's not too many stocks to choose from there. But looking at the other ones, look at the sector ETF, materials, ETF sector, natural resources, right? As commodities continue to drive higher, I'm not going to be surprised that those ETFs go higher as well, right? And we're seeing that momentum right with the RT industries. And look at that, semiconductors, right? Semiconductors, natural resources. Now, sounds about right. Taking a look at the sectors, not far from it. Look, metal, mining, steel, aerospace and defense, paper, commodities, right? Commodities, mining, defense. It's typically where it's hot right now. Crashed in on my CLS covered calls. Oh, cashed in. Gotcha. Ice or ice? Ice storm. Ice storm. Ice storm, Tweely. All right, let's see here. Now, before we get over to what, potentially moving the market, I do want to show you something. And it's really going to be the focus in today's presentation. So to do so, I'm going to go over to the the views tab. Again, I'm not feeling too well. Just the thought of snow and ice here makes me not feel so well, right? Do you get exploding trees down there? CD Drive, is that a real thing? I saw that. There's like an exploding tree warning in like Minnesota or something. Unless I'm going snow skiing, I stay here in the South. That's just how it goes for me. Unless I'm snow skiing or visiting some family, I usually stay here. I've never seen an exploding tree. I've never seen an alert for an exploding tree, but I am seeing alerts for them now. So I'm just curious, is that even a real thing? From the cold temperatures, I saw it on the internet, right? Don't be believing everything you see on the internet. Ryan, don't generator stocks do well in a situation like this? I could see that. I honestly, if you're gonna play, some kind of stocks off the ice storm, me personally, I would look at probably like insurance companies, natural gas, energy companies, things like that. Maybe utilities. Duke Power is located here in North Carolina. But I wouldn't make too many financial decisions off an ice storm here in the Southeast that typically, or a snowstorm that may not even happen, right? So let's be honest about that. All right, today's presentation, we're going to home in on something. So if you come over to the Views tab, there's a little thing here on the right-hand side called Resources. So we're going to scroll down to Special Reports. When I click on this, it's going to bring up the VectorVest University here. It's a great resource, completely free. It's included with just about every, sorry about that, Joey. Popped up on your window, go figure. Just about every, I think just about everything, web-based, mobile, you all have access to VectorVest University. Now, as you scroll down here, all of these essays are important. I've looked at them all quite a bit. You see timing the market scorecard, the Goldilocks scenario is always a good one. Bull market, bear market indicator is a good one to read for sure. But this is what we're going to focus on today, the strategic investment matrix. Just by a show of hands in the room, who is familiar with the strategic investment matrix? Who's familiar with this? It utilizes two indicators here at VectorVest, RV, relative value, and RS, relative safety. Two fundamental indicators. Based off of their ratings, we will get a sense if a stock is, prudent, conservative, aggressive, speculative. All right, perfect. So it sounds like majority of you are. And I said this on yesterday's stream. Who here does not understand the investment matrix, right? I looked at it 20 years ago. So I just want to make sure that, when we go through stocks and the software, because I know we're all different, right? I get some quantum stocks, some AI stocks, some conservative stocks, right? I just want to make sure by telling or by looking at RV and RS, what type of stock that is, right? Because if you're looking at your 401k, you plan on being more conservative. Well, you don't want to put an aggressive or speculative stock in that portfolio potentially, right? Or vice versa. If you want a little bit more play money, you're looking for a little bit more return, taking on a little bit more risk. Hey, nothing wrong with that, but you wouldn't want to put conservative stocks in that type of portfolio, right? So it sounds like most of you are familiar with this. If you're not, check it out. It's a free resource within VectorVest University. Just kind of touch base on this as we go through the live stream. And we can play a game as well, so that way you guys can really show me if you know it. I'll point out some stocks, and you just let me know based off of these two indicators if it's going to be prudent, aggressive, conservative, or more of a speculative pick, right? So that way you're just making sure you're picking the right type of stocks that fit with your style of investing, right? And if you're not familiar with the difference between these styles, come to the essay. Come check out the essay. All right, let's get out of here. Close this out real quick. Let's get over some news stories real quick. Go over the viewers. Pull this up right here. Ooh, which one is it? Oh, it's this one right here. As you can tell, I was looking at it on this page as well. All right, first thing is we've got some big earnings, right? Today, most attention is going to be on these two, GE Aerospace and Intel. GE was before the bell, Intel's after the bell, right? Especially if you're holding tech, semis, things of that nature. Definitely going to be an important earnings to look at for sure. I do have some information on this earnings in particular. We're going to take a look at the ones that reported yesterday. Johnson & Johnson, Charles Schwab, as well. Tomorrow, not too much. You can see Ericsson there. Not too many big names reporting. So looks like today, this afternoon will be the big one here with Intel after the bell as well. We've got Abbott Laboratories, Intuitive Surgical, Capital One. I've done this before, just putting some random stocks that most of us may not look at. The Capital One's got me interested. We'll take a look at it in the VectorVest software. But I do like what I see when it comes to Capital One so far. Now this morning, as far as economic data, KMI had good earnings. My Intel calls. I haven't even looked at what Intel's doing today. We'll definitely take a look at its chart for sure. Now, as far as economic data, PCE edged further away from that 2.0 target, right? 2.8. We're moving in the wrong direction there. So, yes, I can see that throwing a little bit of curveball. We've got to tame that inflation, right? Because if it starts to tick back up, especially if it gets above 3, well, it's going to be hard to justify any kind of interest rate cut, right? It seems like trend now that a company will report beating in earnings, like Netflix, it immediately goes down. Why? Well, Netflix is more complex than that because you also have to take in, there's all kinds of factors. But Netflix has already had bad sentiment because it went from 140 down to 90. It's in the descending channel. We'll take a look at Netflix. I'd like yeah, I like the 70s. That's might be greedy, but the low 80s look real good. Really just pivoted or trying to pivot off my level support. We'll take a look at it in just a moment here. So a couple big stocks I do want to look at. I do want to follow up with Iron. This analyst here from Seeking Alpha seeing another 88% upside potential as AI revenue scales towards $3.4 billion ARR, right? Well, that potential, there comes some risk with it as well. Happened to me last year with NVIDIA too. Interesting. The takeover deal seems to be impacting Netflix. Yes, we did talk about that. That was like 2 or 3 weeks ago, back when I first started talking about Netflix for my 2026 pick. I showed an article that said, hey, this Warner Brothers deal is going to cause some short-term problems in Netflix, which were one of the reasons why that was one of my slowest positions to fill, because I was kind of hoping it would break that descending channel, but it did not. And that's fine, because my dollar cost average for my 2026 portfolio, I think it's right around his valuation, right around $93. So we'll take a look at it in just a moment here. But this one is interesting. Iron Limited used to be an old Bitcoin miner, Ethereum miner, that kind of thing here. But 2026, this is where the rubber meets the pavement, right? They've got a huge deal from Microsoft. It all has to do with the pivot from being a Bitcoin miner or crypto miner, now using those GPUs and that AI data infrastructure they have for AI purposes. And it all leads to Microsoft. That's the big thing here. So as long as they can execute this plan, you see right here, the key risks include delays in scaling, high customer concentration, potential shareholder dilution from recent capital raises. So there is some risk when it comes to this position. It's probably one of my riskier positions, if not one of my riskiest positions in my 2026 portfolio. But I just happened to get it at a good price, close to our valuation, so I was comfortable with that price. I'll look at my cost average. I think it's around $33, $34. It might have went up a little bit because I bought more into it on momentum to the upside. So we'll take a look at that dollar cost average. But I'm still pretty comfortable here. But this forecast, they're seeing $103, right? And as long as there's no delays and this money's actually going to come to fruition and this partnership actually comes to fruition here, I could see $100. We'll see. We'll see what happens between the market, AI sentiment, and making sure that this Microsoft deal comes through. But I don't think $100, 103 is out of the realm of possibility, in the next 12 months or so. Now, if you get delays and construction concerns, or rumors of Microsoft pulling out or whatever it may be, yeah, that's going to dent that sentiment. But right now it looks good with Iron. So, I'm holding it clearly. Here's another one, UAMY, over $10 right now. This one capitalizes on strategic promotion amid market dynamics. Now, they are making a pivotal move here. Where is it at? I think it's Zeolite, if I pronounce it correctly. Where did it go? Short-term held, yet profitability remains a challenge with negative earning margins. These numbers underscore the importance of UAMY's strategic shifts, including domestic mineral supply focus amid geopolitical uncertainties. Let's be honest. I don't have to read the article. WEC, World Economic Forum, WEF. Oh, this is what I was looking for right here. The zeolite sector. So that's what they're trying to get into, right? Essential for various industry applications. But we heard about it. Rare earths still at the center of attention, right? China supply chain. I don't see this company slowing down and it getting back at $10 to $11. Just be careful. I saw real investment, fundamental opportunities sub $6, under $6, maybe under $7, right? But now 10, 11, we'll take a look at the value, but the risk has increased dramatically from a value standpoint, right? And it's going back more into the momentum side of things. So just be careful. UAMY is supposed to expand their plant by 4 times. Yeah, and they got a second plant. I don't know if y'all remember that, but the Department of Defense made sure they got a second plant in this zeolite sector. I think this company's based out of Montana. Yeah, they got a lot. They're pretty much getting every approval, getting fast tracked for everything by the government, right? So yeah, I'm still going to be bullish UAMY. All right, let's get to it here. Intel. I got a couple different things about Intel here. First thing, Intel's new problem. All about execution, right? It's almost like Iron Limited, right? So much attention is now on these two companies. There's a lot of opportunities there, but they got to be able to execute those opportunities, right? And that's still, according to this analyst, Intel's core vulnerability, especially with recent stock gains, underpinned by external validation rather than tangible operational progress, right? I've said it before, Intel's going up for every reason but Intel, whether it's AMD, partnership, NVIDIA, the U.S. government, whatever it may be. Just be careful here. But this is where I'm going to focus on when it comes to Intel in today's presentation, this CCG. Anybody know what CCG is? That is was it consumer? Oh my God. Where is it? Client Computing Group. That's what it is. Duh. All right. Let's see here. That's the biggest segment. If I go back here, weakness. So this is here. CCG weakness could pressure foundries' return on investment prospects. So I went over here. The CCG. I asked who competes with Intel's CCG, right? Look, it's AMD. It's ARM. ARM's getting crushed, but AMD's looking real good, right? ARM uses Qualcomm and Apple, who are strong, right? Now, CCGs make up more than 50% of Intel's revenue, right? Highlighting the importance of a primary cash generator for the company, covering desktop, notebook, and 2-in-1 processors, right? It is used in ion exchange detergent, but it can be used in rare earth absorption. Ah, interesting. Okay, I didn't think it was a rare earth. Is it a type of, I guess I wouldn't be a critical mineral either, right? I wouldn't think so. I'm not an expert in that stuff. I'm not going to pretend like I am. I just thought it was interesting, but they're getting more and more entangled. I know their UAMY is part of, was it the critical mineral stockpile initiative that they're trying to start as well, or been starting essentially. But as far as Intel CPU market share has decreased due to strong competition, especially from AMD and ARM, right? So again, Intel still has pressure. Still has a lot of pressure with the company, right? However, see here, they're trying to pivot. This is it right here. Focus is shifting towards AI PCs to counter these trends. AI PC, right? Trying to add AI to everything for a selling point. Well, they're not the only ones that are doing that. Their competition, Qualcomm, Intel, NVIDIA, AMD, right? So it's still got some steep competition. So I'm not too impressed with Intel as far as what they can produce, but this is what it's all about. Intel still operates roughly a fifth of the United States fabs. So yeah, the company's important. That's why I see the government in it. And that's why I'm not going to be surprised to see this momentum in Intel continue. Now, hopefully they can execute with these new partnerships and with, the partnership with the government, obviously, it was a 10% stake, something like that. But that partnership with the government alone should help them fast track what they need to get done to be successful and ultimately compete with Taiwan Semiconductor, right? Because that's what it's all about. And we'll see, but they're still far behind from Taiwan Semiconductor. All right, let me close out of this real quick. Yeah, Wolf still. But I will say one thing. My cousin's still holding it. Again, he just got promoted to vice president of AI and large language model for a top fintech company. So, I didn't pick Intel. And just curious here, let's do something. I'm just curious who's winning. First month's almost over. Let's go to second day here. It's Cousin Eddie's portfolio. Oh. Please don't freeze on me. There we go. All right, quick test. Oh, let me change this back here. All right, so he's up 14% year to date. VectorVest composite up almost 5% there. Glenn, let's see where Glenn's at so far. Oh. Glenn's up about 1.47%. All right, let's get back here. Let's go to Trending Thursday. Now, as far as, let's organize these by value. Look at what the most overvalued company when it comes to the earnings list, right? Again, these are just some of the top earnings from yesterday and today. Cousin Eddie FTW. What do you mean by that? LAES, I saw that. Navitas. Anybody see Navitas hit $11 today? That was crazy. SARS value, that's why I like this Capital One here. We got 2 buy recommendations. Intel, even though it's greatly overvalued, the most overvalued in this list, it still has a buy rating, right? Look at the fundamentals. RV, it's not there, right? Like long-term price appreciation, you're not getting any of that with Intel. But what you are getting, a little bit of sense of safety and a whole lot of momentum behind the trend right now. Ryan, will you go over Palantir? Not sure why it's been underperforming. Is it the valuation? I would 100% think it's the valuation. Richard? Who thinks that Palantir's woes right now are more than the valuation? I mean, the stock went from $20, roughly, depending on the day, we'll say close to 200, right? Within the last, year or so? I'm going to say valuation. I would say valuation concerns as far as Palantir. But we'll take a look at it, though. John says nope. Fair enough, John. Fair enough. All right. As far as this list here, so as far as earnings, let's go in here. RS is also going to give us a sense of consistency with earnings, right? Capital One's at the top of the list. RV, Alcoa at the top of the list here, with Capital One right behind. Interesting. Let's graph these real quick. Let's add value. Look at the value. It's just chasing value right now. A little bit of consolidation. I don't mind it. You can see the consolidation right here. Let me get rid of this last close button. Top of the consolidation right here. Treat it more like a zone. That'll be my zone, resistance zone up at the top. But I wouldn't be surprised with a breakout to the upside. I know we got a lot of momentum here recently, but look at the value. Now approaching over $80. Earnings per share at a 12-month high. RT relative timing still going further and further in a positive territory. I like it. Ollie G says Burry was right. Burry was right. I don't know. We'll find out, but he should be sitting positive in that short position because I think he shorted right around 200, right? Owned AA for a short time before the consolidation. Okay. Hey, that ain't bad, CD Drive. I mean, honestly, I see a gap down here. So if it does break this little bit of consolidation that we're seeing, maybe fill the gap to look for that pivot down here. But overall, the stock is good. I mean, it just looks really good. Now, if I wanted to, add a technical perspective, I could use something like a 20-day EMA here. Let's just add it real quick. Zoom into a 3-month time span. Yeah, you can see that 20-day EMA, typically a good point to accumulate some shares. Looks like we were close to it a couple, 2 trading sessions ago. We're seeing this resistance. Almost looks like a bearish engulfing. Let's zoom in 3 months here. Yeah, it could be a bearish engulfing. Figure out if we get some follow through tomorrow. Yeah, I want to be in a rush in it. Again, just logically thinking, having some patience, trying to get some shares near the 20-day EMA with an appropriate stop loss, probably be the best way to go. But overall, lower left, upper right, I like the direction of the stock. Earnings per share on the move as well. Nice. Now here's Capital One. Let's go to a 1-year chart. Now the stock was overvalued. Hasn't really done a whole lot, but look at that value moving to the upside. I'm really liking this one. And as well, this prior swing high here, we've got 2 touches on. Now we're touching it from the bottom, right? So this looks like it's going to shape up as a nice level of support here around 230. So as long as price action stays above this 230, I wouldn't be too concerned. as well for some confirmation to the upside. Obviously, I'd like to see price action get above that 20-day EMA, because as soon as we broke it, we retested it from the bottom end, right? And I don't want to be getting into Capital One during retest from the bottom end of a 20-day EMA, right? That only works out. That usually works out well for the bears, right? Usually works out well for the bears. Wait and see if they get some earnings momentum. Hey, Alcoa, that's how you let the dust settle, right? Some earnings momentum. I like that, CD Drive. But all in all, Alcoa, AA, nice stock. Let's go to 6 months here. Capital One looks good. Just got to get above the 20. I like the valuation perspective. Abbott, nope. Look, value declining, price declining. And with the earnings this morning, I think it was this morning, right? You see the earnings. There we go. This morning, big gap down. I'm not liking it. I'm not liking it. I saw the earnings for Ubisoft where they paused, a couple of their games, and they're down like 30% last time I looked. Actually, while we're thinking about it, because I didn't put it in the list here, I think it's Ubisoft. Is it Ubisoft Entertainment? Is it this one? It might be the other one. Yeah, they're back gapping down. Yep, there's the gap down right there. Wait, no, that's not it either. Entertainment, leisure. Oh, maybe they didn't have earnings. Maybe it was just on the news that they're stopped making those games. Either way, I'd stay away from this one. I'd stay away from Ubisoft right now. All right. But yeah, as far as Abbott, I'm not liking that. With the value on the decline, price on the decline, I like the big upper wick, but I'm not seeing it. It tried to rally this morning, but I'm just not seeing it. Let's go to a 1-year chart here. Let's go further back. I mean, look at this. The stock was just so over its valuation. It had to wait from 2023 till recently, 2025, essentially for value to catch up. And once it caught up, stock price went down. Oh, man. Just by looking at it, you have to see what's going on with the earnings call. But I like the fact that finally, for the first time in almost 3 years, you actually have some value opportunities when it comes to Abbott Laboratories, right? Now, am I saying jump in it as soon as it gaps down? No. That's dangerous, right? But maybe putting this on a watch list or something. But look at those earnings per share. I like it. It's just, if I scroll back here. Oh, yeah. Looks like the COVID era. The end of the COVID era messed the stock up, right? You can see the value dropping, price dropping, kind of did nothing. And the value took a long time to catch back up. Interesting stock. But I'm not sold on it. Not yet. You see the sell recommendation in effect right now. So be careful if you're holding it. Procter & Gamble. Let's scroll back here. Well, I'll tell you what. Our valuation looks pretty relevant because this Procter & Gamble keeps going down and down and down and down. I'm actually surprised there's not a sell recommendation here. Interesting. I wonder if, because we use, a 13-week moving average, I wonder if because it's such a gradual downslope, that's why you're not seeing the sell. Interesting. But still overvalued. Let's look at the big picture here. 5 years. Here was a fair value on Procter & Gamble. You can see the value just kind of lackluster. Price action, try to diverge away from it, but again, a big rollover, really since beginning of 2023. Price action is rolling over. I'm not quite sold on it. There's a lot better stock picks out there. Here's GE Aerospace. Well, right at the 20-day EMA. So if you got some discipline, and it's a rough one today. Let's go to 6 months. That was the weekly. Here's the daily candlestick. I don't like it. It's just so overvalued. Price action. Let's add something here. I got to get excited about this one. I'm not that excited about it. Growth rate 16%, but it's dropping. I don't know, I'm not that excited about this one. I'll be honest with you. You have to watch the earnings, but looks like a gap down, so it may not be the best earnings call. Here's ISRG. This resistance level I've been looking at for a while here, just staying in place. The stock just so overvalued. And this could be a Procter & Gamble situation, right? Where we need a lot of time for value to catch up to price to finally get excited about it. But right now, I'm not too excited about that. Let's look at the big picture, 5 years. Yeah, it's just going further and further away from our valuation. Value's rising, so I do like to see the life and value. Interesting. But it's that resistance. If you're holding this, if it breaks this 523 level, just be careful. Can we star search? What do you mean? Oh, star search. Yeah, I don't mind that. All right, here's Intel. Let me put y'all on something now. Since yesterday I talked about the symmetry of stocks, we do something about that today. I took one of my first classes actually in college was geometry of nature. If you're familiar with fractals and Fibonacci's and stuff like that, I am very as well. I don't really use a whole lot of Fibonacci's, just not really my thing. So here's a trick for Intel, right? You see ascending channel. We've been talking about it, right? We just broke above that ascending channel. There we go. So what I'm going to do is I'm going to take the high from the channel, the low from the channel, right? Put it right on the breakout. Well, boom. That puts me right there. So we've met the target potential from breaking out of this channel to the upside, essentially, right? But with the value flat right now, and I was looking at the options swing. They're looking at about a 10% swing, close to 10%. If anyone wants to Google that real quick, or if they know an updated number, but I think as far as this morning, I want to say it was around like 9.8%. So just be careful. What, $55, 10%? That was $5-6, right? But still looks good. I just don't like the fact we're right here at the top of this thing. So earnings per share is climbing. Let's look at the big picture of Intel. Let's go to 5 years here. Stock going to crap because pretty much AMD and NVIDIA took over the spotlight, right? That value is not coming back. Earnings per share is dropping. It's hard to get excited about it. The only reason why I got some faith in Intel is because my cousin's in it, and he's put me on the right side of semiconductors for a long time. But I don't know. Intel is hard to get behind. It's hard to get behind. I like the Intel chart. The shock of any bad in their earnings could be dangerous. Yes, they really. You know what they have to talk about in their earnings? They have to talk about the execution. The plan, we all kind of know the plan, right? They're going to get the help from the government, the NVIDIA, the AMD. They're trying to get help from everybody, but they got to be able to produce stuff. They got to be able to compete with TSM. That's what it's all about, right? I don't necessarily see it, but right now we got about 10-point swing. What I wouldn't be surprised of is a retest on the top end of this channel. And that's going to go off of technical analysis rather than the earnings call itself. Because if we get a 10-point swing down, yeah, we could easily retest the top of this channel here. But Cousin Eddie for the win. Cousin Eddie for the win. I can't hate on him. He got it down here. Well, he actually did get it fair value, right? So, like me, I trust that value, and I am a strict technical day trader, but I have yet to come across an indicator, VectorVest or not, that has my attention as much as value. And I'm talking about as far as an individual stock indicator. Right? Market indicator, I like my DEW, my MTI. But yeah, if you got into it around that fair value, yeah, you're looking good, right? I wouldn't even sell it. Maybe selling calls, turn into some kind of income strategy at this point, right? Because it doesn't look like the momentum's slowing down. And as long as we're screaming, hey, domestic chip manufacturing is a top priority here in the United States. Yeah, the Intel, like the last article I put out, 15 to 20%, so close to about a fifth of the country's fabs are Intel. Yeah, that's an important company. Yeah, still woof woof, Bill. I'm still woof woof on it too. And personally, again, don't shoot me the messenger. But I'm looking at a retest on this channel here. I'm looking at a retest. Looking at the symmetry here, we came right to the fruition of the breakout of this channel, right as earnings, and now the stock is showing pretty much indecision, right? Indecision. So just keep that in mind. All right, that was Intel. Let's go over here. News. We got iron and UAMY. But actually, you know what I'll do? I know a lot. Let's do this. These are my stock picks here. 20% in the first month is not even over. Hit that like button if you're happy I did this portfolio competition. Now, as far as Glenn, he's up 3.3%, but he didn't have gold and silver. And I know that did pretty well with the silver one thing. That's fine. What I am happy, though, is my dollar cost average picks is working out better than just a flat-out January 2nd start, because that would have looked retarded on my behalf if just a flat-out start would have been performing better. So that looks good. See here, Reitsbus Nets Nitro, down 6%. So we'll take a look at it here, but it's down 6% right now. Let's go in here. Let's go to ROI. Biggest winner, UAMY. And there actually, I do have a bag in hand with UAMY from the first batch I bought. So I'm just, but look, iShares, I've said this before, my whole portfolio, you heard it all over Davos, right? So, China supply chain, Western independence. My whole portfolio is kind of designed around that. We got defense here, we've got mining, we got silver, we got Micron, iron. This was a little bit more speculative AI play, but since I was able to scoop it, I think the first was about 33, but my average is at 44, so that's not too bad. UAMY, my average is less than 6, so as far as an investment, I'm totally happy with less than $6 for 2026. Netflix averaging around 92. I'm down about 10% here. That's fine. I think that'll kind of fix itself out as we get further away from this WBD deal. We'll see here. I copied all of that, and most are options up a huge amount. You're welcome, Ollie G. I do this for you guys. I started a new portfolio with a customized search criteria at the start of the year. Now, 14%. Awesome. My wife wants a BMW, and I'm not going to take a loan for it. Ollie G, I love it. You know how you spell BMW? UAMY. Oh, actually, that's probably how you spell Rolls Royce. If you throw in options on there. Yeah, it's all right. We're doing good this year. All right, so let's take a look at some of these stocks here. I want to look at Micron. I'm going to look at Netflix, Meta, my trouble. Millie, that's about steady as it gets. I don't need to look at that one today. TSM, I want to look at here. Iron, ISSC. So we'll graph these. We'll go to view stock graph. Let's see here. MU, look at that. We got the breakout too. I was saying, look at the 350 for the retest. I mean, you got to have some patience. And Micron, just like NVIDIA, you can't just always go up. It's going to have some pullbacks too, right? 350 is still my level I'd look at. We haven't had a touch on the 20-day EMA in a while. So I'm looking at the 350 for that. We'll see. But it's going to be hard going into earnings, because, we know, just if you think about it, especially if you've been trading semis for a while, you remember the NVIDIA, AMD days, right? Well, they usually like to go up before earnings, right? Look what's happening as soon as we're getting into earnings season. And actually, anybody want to Google it real quick? When is Micron's earnings? Can we please add IRE leverage to VectorVest system? What do you mean by that? What's IRE leverage? Oh, iron leverage? IRE. Leverage. IREG? Oh, it is leverage. 2 times leverage? Oh, it's late in the season. Oh, actually, it is typically late in the season, isn't it? UAMY RT's at 2.0. When are you going to sell? We'll take a look at MU. We'll take a look at MU here. Oh, iron leverage. What's the symbol for that, Roxar? Is it IREG? Is it not in there? Really? Oh, it's not. Let me write that down. Grab a pen. Let's see here. IREG. Is that correct? All right. March 18th. What? That's the day before my birthday. I feel like there's a big one on my birthday. What stock is reporting on March 19th, 2026? Let's see here. it's not open yet. No reports available. All right. And how they have short for iron. Next one, IREX. IREX. All right, I'll write these down. I'll just try to get some in general. All right, let's scroll down here. But Micron looks good. Look at that earnings per share. Growth rate's ticking up 39%. We're getting a breakout. It was 38%. Now it's ticking up 39%. I've said it before. It's probably been a month or two. I think probably closer to 2 months. They're doing close to $100 billion combined chip fab in New York. $100 billion between, taxpayers and their investments and all that good stuff. I will not be surprised one bit if Micron hits $1 trillion market cap probably in the next year or two. Maybe sooner. I'd have to look at its market cap. Actually, let's take a look at its market cap while we're talking about it. 445 at $400. I could see it hitting, maybe $900. Yeah, I can see that in a year or two for $1 trillion market cap. I'm not going to be surprised by that. Micron earnings March 20th. Let's see here. Scroll down, but yeah, I still like Micron. It's hard not to. ISSC still hit my resistance here. It's all right because I do like this bottom wick because that might have given me the retest I need. Not quite. Still like it overall though. Probably gonna get a test on this 20-day EMA at some point. Still making its way up. But growth rate 25, earnings per share rising, value 21. So slightly, where's it close? 21.55. Slightly undervalued. We'll say fairly valued right now. That's right in tangent. But I do like price action rising, value rising, soaring higher. Here's iron. There's my level of resistance. So now it's just caught in here. I like this bottom wick yesterday because we got a fresh 20-day EMA pivot. Not quite a pivot, but a touch here. We get another candlestick higher. We might be able to call that a pivot. But RT still struggling. So again, there's a very speculative play here, right? Very speculative play. If you're in iron, I'd put a trend line here. If it breaks this trend line, definitely be getting more defensive at that point. But as of right now, it still looks healthy. Still looks healthy. MU is overextended. I am shorting it. Interesting. Poet secondary offering. I saw that ABB. I saw that with Poet here. We can take a look at Poet. I'll take a look at Navitas as well before we get to your stock picks. Taiwan Semi. That's a steady Eddie. Lower left, upper right, chasing value. King of the semiconductor manufacturing, right? Yeah, we're probably going to touch a 20-day EMA here soon. Retest, all healthy, good stuff. This is my support level, around 314. What I do like is that 20-day EMA is now above the support level. So we don't necessarily have to retest it, but if we do break that 20-day EMA, I'd look at the support level here. But overall, still liking it. Growth rate, 24%. That's phenomenal. I mean, it was 26, a little bit of a taper. Hey, that's okay, but you compare that to Micron. Micron just went to 39%. But TSM is actually $1 trillion company. They're like, I'll have to look. Market cap 1.3 maybe. Oh man, that's almost $2 trillion, $1.7 trillion. Almost a $2 trillion company, and you're having 24% growth rate in earnings. You can see why I'm holding them. Here's Meta. Meta's my problem child, and boom, there's the pivot I was looking for, and go figure it happened the week after. Because again, I made the rule where I had all these positions in these portfolios had to be filled by the second week of January. If I scroll back here, this is what I was looking at. Boom! Look at that. That's a nice little pivot there. Undervalued. We got price rising, higher swing low than the prior low. We're just needing a higher high, really. So we're not quite in an uptrend by definition, per se. But I do like what I see. Value rising, price rising. It was a risky gamble. But hey, for a Mag 7 company that's undervalued, I think the risk was worth it for me personally. RT, again, still risky from the technical perspective here. Just because RT is below 1. But I'm really liking this catch here. Seeing some nice follow through today on this move. Growth rate earnings, yeah, it's not going to be the reason why I'm impressed. Went from 27%. Now to finish out at there's 13% here. All right, Meta, you might be my problem child, but you might get your act together. Here's Netflix. Here's my other problem child, right? But yeah, this is what I said. Look at the descending channel here, right? So from the earnings call, if you're going into earnings, right, in a descending channel. Just from a technical perspective, I'm not gonna like that, especially with the news with WBD and all that good stuff. But here's my support zone. I mean, just for the fact that it stopped right at this zone here, right at the top of it at 82. My next level is at 77. So you got about a $5 spread on the zone there. I mean, the conservative approach, right, would be waiting for this price action to definitely, or I'll say prudent, maybe not conservative, prudent, wait for price action, at least start breaking above this descending channel, right? Now, if you take a couple nibbles in the low 80s, you know, it dips in the 70s, but I want to be, you know, filling my position or, you know, or overly doing it right now. You know, I'm going to take a couple nibbles, but the real follow through, the real conviction is breaking this descending channel. And that's fine, you know, because what I see here is the stock was greatly overvalued. The market corrected that problem, but now, you know, between the deal and the sell off recently, now I'm seeing value. You know, now I see some value here. It's a little risky right now. Value is the green line. Yes, Nathan. Value is the green line. Maybe I'll make it area. There we go. Make it a little bit better here. If I zoom out, the big picture, 5 years. So you see the stock trading at a premium this entire time, which isn't necessarily a bad thing, you know, because I'm seeing life and value. But at some point, you know, this don't look good, right? This is just getting way too stretched from value. Look at the last time here. If I just use a little freehand line, look at this. Look at the last time I got way overstretched from value, right? Here's a little line, connect it. And now let's put it here, right? Not far. Over here, kinda, not really. But here, just got too overextended, right? I just see a great opportunity there. And I know it's not that came to fruition yet. And we'll see. I don't have a crystal ball, but that's just an opportunity I see. All right, 3 months here. I still like it. Still like it overall. All right, let's close out that one here. Was it 247? Joey, how many likes we got, bud? Where's that at? All right, might need to pull up this window here. Oh, let me get rid of that. There we go. All right. All right, we getting 6 stocks today. 6 stocks. First 6 stocks coming across the comment section of the one we're going to go over. See here. Turning Thursday. Your picks. Oh, yeah. I'm going to put UAMY there. I forgot to cover that one. And Poet and Navitas as my honorable mentions. Now for the 6 here, let me scroll back up. I got new. No. GD XU. OSS. AROC. I just did Intel. We can look at it again. AVGO. Is it still getting rejection after it broke out of that channel? I'm just curious. PSIX. Because that should be 9. Okay, we do have 9. Perfect. Wait. There we go. Oh, put in PSIX. There we go. Get in Broadcom. Broadcom is there. All right, let's take a look at these here real quick. Here's UAMY. We're right at the gap. Do you see my level of resistance here? This gap here. We might just fill this gap. I'd be surprised if we went this whole way and didn't fill this gap. But once we fill this gap, be careful. Look at the value, right? Value's moving up steady. And I've said this before. As long as price action stays below this red line, I'm okay with it, right? But once it gets above this red line, that's when the rare earth, you know, the momentum, all the crazy stuff happens. If I was going to trim a little profits or sell a covered call, right now we're at 1045. I'd probably look closer to 1166. maybe trim, take a little off the table, right? We've seen it before, breaks out, comes back in. I wouldn't be surprised if it came back to this red line at some point. And a lot of that news, with China and stuff is going to depend on that. But as far as the stock, I still like it at all. I love the company. RT relative timing is at 2. So much momentum here. And we're still trading at sessions highs. So yeah, I would look around 1168. But this is a fast moving stock here. Earnings per share. Let's see here. Let's use the Dateline. Earnings per share, 15 cents, now 22 cents. I like that. Oh, Richard, thank you for that. Take a look at it right now. LTR. Thank you for that super chat. Appreciate you. Yeah, I've said this before. Once we left that ascending channel, you're in no man's land. You got the retest from the bottom of that ascending channel, right? And now we're getting lower highs, lower lows. Look at the value here, right? Look at the value. The value went from $8 to 23, 24 bucks. But 16, 100%. It's up 200%. The value is, right? But the problem is the stock went up like 1,000%. And really, since August, the stock really hasn't gone anywhere, right? So I've just seen a breather, right? Now, if you take out this low here, around 150, 151, then I'd see some real troubles ahead, right? Maybe you can add a 200-day moving average. Since the stock's taking a breather here, it's probably letting the technicals catch up. So one of the most logical ones to wait for to catch up is going to be probably the 200-day. Scroll this back up. Oh, yeah, look at there. 200 days, getting right close to it. Not too surprised by that, right? So let's zoom in. Actually, I'm going to make this a little bigger so you can see it. So this is a little zone that I have here from about 151 to about 163, right? And it's 200 days making its way up in the zone. I wouldn't be surprised to see a pivot there. But if you break that 200-day, I mean, yeah, I already gave you the warning sign of the ascending or breaking the channel. Now, if you break the 200-day, that's on you. Look at the sell rating here. Flashed. We got a little flash of a buy, but it's just more of a mixed bag now. Let's go to a 5-year chart. Stocks. That's a big move. That's a big move there, especially with value. I mean, I like value moving up, but it's getting nowhere close to where Palantir actually moved to. So from a valuation perspective, I would just be cautious with Palantir. But yeah, if it breaks that 200-day, definitely would be cautious of that. You can see it right there. 200-day, 156. 156, Richard. Keep that in mind. Yeah. It's got to stay above that 200. It's got to. I could see troubled waters ahead. If we do get into troubled waters, ideally in like a bad case of a Palantir sell-off, I would probably look at closer to 124 to 118. And I'm talking about a bad case, right? We're not there yet. Now, if we break this 200-day scenario, then that would become more of a reality to me, right? More of a reality to me. Let's see here. Oh, thank you. Well, actually, look at that. We just get all kinds of. Let's see here. We got TEM, ONDS, and I'll get to the other stocks in just a moment here. Tempus AI. I'm going to put this in the Palantir category. Let's scroll back here real quick. It's just always been overvalued. See, freehand line. That's it right there. I need to see the fundamentals catch up, though, more. Like a lot more. Pelosi stock. Palantir is heading down by the chart I use has a sell signal on the chart. Yeah, Palantir, I'm going to say is more of no man's land. right now, but that 150 to 156 range between that support and that 200-day moving, that's what you got to focus on. I mean, just from a technical perspective, that's what you have to focus on, right? Now, as far as this Tempest AI, clearly I've looked at this before here. Now, this I'm going to put in that overvalued category, that AI concerns category. Look how volatile this stock is. This is a speculative play. I don't even have to look at RV and RS, right? I'm going to probably going to assume that is speculative. I don't think there's going to be a high RV or a high RS on this position, right? And look at RT all over the place. The one thing you do have, the earnings per share were not good, negative, right? Close to $2. Now, earnings per share is negative around 40 cents. And look at the growth rate. It was negative as well. Now you're up almost 20%. So I do like the stock, but I'm not going to be shocked. If I had to guess, if that trend line continues up and the stock keeps piddling around, probably, it could test it and go for a little run to the upside. I don't see the stock doing a whole lot, as far as an investment perspective until that valuation starts ticking up a little bit more, right? Now, as far as swing trades, you can see there's definitely some opportunities there when it comes to some swing trades. But as far as the stock, and again, I don't, let's do this actually. So that's the 200-day. Oh, it's below the 200-day. So look, it tested it. Ooh, this is not good. This is not what you want to see here. Tested it from the top, right? Broke it, retest from the bottom. And now we've been retesting it from the bottom for like the last 2 weeks here. So I'm going to be bearish on it right now. I'm not going to be too optimistic. But I wouldn't be in a rush to sell it unless we surpass this swing low here. You see my zone, a lot of consolidation in this zone recently. But yeah, as long as we hold this swing low, I'm okay with it. So if you are a swing trader holding this stock, which would be more appropriate, just put a trend line there. As long as you stay above the trend line, hey, I'll be happy with it. But the pressure is on. Pressure is on when it comes to that stock. Let's see here. Alex Karp is in real trouble. Let's see. Let's see the second stock here. ONDS. Look at the value. The value is nice. Look at this. The value back here was 15 cents. Now the value is 176. That's life and value. That's up 1,000% in less than a year. Our valuation, right? Now, I know the stock price went up even higher. Well, that was 80 cents. Yeah, higher than 1,000%. So for this stock here, since I'm not going to go off the company's fundamentals too much, I really just want to stay above this swing high here. It broke above it, came back down, retested that swing high along with the 20-day EMA. So from a technical, trade setup perspective, it looks good. It looks real good. Now, as far as investment, I'm not going to go all willy-nilly on this because right now we're only buying the stock around $2. Stock's trading at $13.29, which I'm not saying it can't go higher, but just there's some risk involved with that, right? There's some risk involved with that. Let's see here, but growth rate earnings 25. It's not a bad stock. One thing. Yeah, as long as it stays, I'm just going to say the swing high here. As long as it stays above this, I'm not going to be too concerned about it. That's around $11.48. All right, let's go back here. Now, UAMY, we're right at the gap fill, right? So I'm going to put my next target, 1168 here. And I got no rejection. We just entered that gap, and we're trading at sessions highs right now still. So I'm liking it. I'm liking it a lot. Here's GDX. Boom, 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 boom. Boom, 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 boom. There's the ascending channel on GDX. So we were in ascending channel, right? Oh, I didn't even know we had this advanced thing here. Interesting. Let's right click, make this bigger. Almost looked like it did want to retest it there. Yeah, it broke above the channel. So now we're getting that little short parabolic move you typically get from a breakout on the top end of that channel. Thank you, Valaxi, by the way. Thank you. I like this. I mean, let's go to 5 years. Look at that move. Freehand line. I want to do from the bottom of the cup to the top of the cup here. Looks about right in here. So yeah, that's why I had this line here. Oh wait, no, that was the last close. So it looks like the cup and handle came to fruition here. Let me just, from the low. Yeah, that sounds about right. So we are kind of close to that zone of the cup and handle, right? So from a technical perspective, yeah, the target's there when it comes to gold, right? Now you just got some geopolitical, concerns and all that good stuff that still could push gold higher, right? Now, if there is a pullback of gold, I still like it. As far as this ETF here, I wouldn't be chasing this momentum right now since we just broke out of the channel, and we just reached the fruition of that move. Yeah, I wouldn't be in a rush to chase it right now. I want to be in a rush to chase it. Let's see here. Thanks, Ryan, especially for not putting me in timeout. No, Bill, no timeout. When you say you like it, do you mean you want to enter it as a position? Sometimes, Robin. It also depends if I'm thinking of a trade or an investment. Like this one, I would only like it if I was already in the channel. You know me, I trade a lot of channels, so obviously I'm going to aim for the bottom of the channel because this channel, by this touch here, by this point, you already know the channel. Grab that line by accident here. Has been identified, right? Yeah, and we're at the top end of this target. Yeah, I'm not going to buy gold right now. If you're in it, hey, that's cool. But I'd look for, 20, 40, little pullback zones, to load up on it. PSIX, let's go to 1 year. Look at this. Undervalued, chasing value. Had a nice support zone here. Broke it. I'm liking this a lot, actually. RT back in favorable territory because we did get a dip here. And look at the buy rating. In effect now for several trading sessions. Buy rating first coming into place on this dip opportunity here. Let's see. The close that day was 71, and right now they're at 79. I got bottom wicks for buying pressure on the bottom end. I like it so far. RT above 1. Earnings per share is rising. 30% growth rate in earnings. We value the company at $120. Just generally speaking, I do like this stock. As an investment, yeah. You could even do a little bit, swing trade here. Probably want to be the most volatile swing trade by any means. So the swing lows here, probably get some resistance. I'm going to treat it more of a zone. If I really want some conviction, because I'm not going to buy right at resistance. It doesn't make a whole lot of sense to me. I'm trying to match up with the bottom of this candlestick. I got the body over here. I really want to see a breakout above. It says $82.99. I'm going to call it $83. I'm going to call it $83. If it gets above 83, that's the confirmation I'd like to see. Otherwise, we're still right at this resistance zone. We could easily, get some rejection, maybe retest this 20-day EMA or something. I wouldn't be surprised. But as long as it doesn't go below 68, I'm okay with it. But right now, for confirmation to the upside, I'm looking around 83. Get out of this resistance zone. But I like it. Undervalued. So this could be a nice little swing trade, potentially, or just a nice investment. If you look at the last year, other than this hiccup here, nice price action. But look at values dropping. Yeah. See how I looked at it way back here. This is a great company. It looks good. And the valuation, I like it. Because back here, you're getting fair value, but I don't know. It's hard to say that's a bad trade. I like this trade setup overall. Here's Intel. Again, when it comes to Intel, someone wanted to look at this one again. I just did a symmetry for a target. Here's the channel. Broke the channel. Right now we're at target. You can see the indecision today. I wouldn't be surprised. We'll see what the earnings call has, but I'd be a little bit more on the defensive side than the optimistic side as far as Intel. But I know as soon as I say that, it's going to be up 10% after the bell, right? We'll see. Here's Arch Rock Inc. Again, look at the undervalued opportunities with this position here. And looks like we took out this resistance finally. Look at that broke it. So if we broke it, what is likely to happen next, right? What is likely to happen when you break something? Anybody remember? Who remembers? Who remembers? Retest, right? And that retest level might be probably around, 2657. Right now we're at 2773. And you see the 20-day EMA moving right into my retest zone here almost. I like this trade. I mean, rising earnings, growth rate earnings, 21%, over 20%, like that. Valuation looking good. Let's look at the big picture, 5 years. Big picture sold me on it for sure. Look at that. Yeah, who wouldn't want to hold some arch rock? It's petroleum. I'm not the biggest fan of petroleum. But I do like this. If I am going to get in petroleum, I want rising earnings, positive growth rate, undervalued, because there could be a whole lot of problems with petroleum stocks, right? All right, scroll down. OSS, that's momentum. Let's use Star Search. Yeah, look at the Bollinger Bands. We're hugging this upper Bollinger Band right now. The Star Search, let me put at about 843. That's going to be your stop, right? So, take some off the table. Hey, but I will say this. You see we got overextended on this band here, and right now we're hugging again. Don't be surprised if we can pull back from this band, right? For example, you see right here, touching the band, overextended, come back a little bit. Because these are Bollinger Bands. This would have hugged it for a couple days and kind of pulled back. So just be careful. A lot of movement here. Definitely get in on the overextended side of things. Here's Broadcom. Let me use the VectorVest Simple again. All right, there's the sell rating. Voila. There's the ascending channel we were in. This is the weekly, so let's just go to the daily. Let's check out value, 285. So this is the level I was looking at before. So we had a gap fill. Here you see the gap. We haven't filled the gap yet. So I was looking around 310 on it. Has been overvalued quite a bit, but look at the value rising, coming in at 285. If I put this out a little bit here, you can see the candlesticks. The last time price action touched valuation, look at the momentum that followed suit, right? As soon as investors said, hey, we're getting a good deal on Broadcom, look at the rally, right? Might see that opportunity again here in the near future, but we just broke that ascending channel. We've got the rejection, the bottom touches from the bottom end of this channel. So yeah, I'm not going to catch a falling knife, and we got a fresh sell rating on it today. So I want to be in a rush to sell it. Would not be in a rush. And look at RT relative timing. It told us. It actually gave us a few days. Look at this. Oh wait, no, it's this one right here. Is this at 0.96? The day before price action breaks the ascending channel. RT gave us a warning sign. Go ahead, hit that like button for the software. I mean, you got to love these proprietary indicators. Earnings per share. I like the stock. A little overvalued, a little pressure on price. That's fine because it looks like price probably coming back down to fairly valued opportunities, right? And last time that happened, again, just to show you, you see that worked out pretty well for investors. So I wouldn't be in a rush to buy it right now. Here's Gorilla. Gorilla has one of the highest growth rate earnings in the entire database, if I remember correctly, because this was the one I've done a couple of like growth rate earning videos and growth stock videos because of these interest rate cuts. But you look at price pressure, it is on, but look at this value here. What is going on with this? Earnings per share. Let's try this. Let's go back here. And it's definitely a turnaround story. If I use earnings growth rate, what's the growth rate here? 52%. Yeah, there's been some price pressure. I mean, the stock went from $8, or no, I'm looking at the date, $2 to right around the 40s. Went from $2 to the 40s. The stock was greatly overvalued, right? I would have stuck to the technicals here. I could have made some money. No surprise there, right? But now, what was once just a pure technical play, now we're getting fundamentals. Now we're getting value. Now we're actually getting positive forecasted earnings per share. The growth rate earnings, this looked pretty good this entire time, but it did rise from 21 to 49. For this company, the fundamentals really garnishing some attention for me. Now, as far as the stock itself, the price pressure is on. Well, actually, hold up. We got to buy. Gorilla Tech has got a buy rating here. Huh. Man, look at the value, though. I like it. Just because it's undervalued, we got a fresh buy rating. You know me, I'm cheap. I don't like to buy at highs. I want to find undervalued stocks where the market misprices them. And this looks like that kind of category to me, you know. But what I don't like is see this value rolling over here, because last time value shot up. See how it rolled back over? So I'm going to do a cutoff here. If value drops below this, I'm going to be concerned. That's about $20 here. Right? So I'm going to give it a little bit more wiggle room. But I want that value to keep rising. And as far as price action, if I go to a 3-month chart, or let's do 6 month, we got a prior swing high right here. Actually, we got several touches on the bottom, several touches at the top. So we're right near resistance. It's around 1550. Right now we're about 1479, 1480. So we're close there, right? So I'm not going to buy it that close to resistance. If you want to take some nibbles, that's on you. I had to call Schwab to buy GRRR stock. Really? Interesting. But this is interesting. I like the setup. But I will say this. You got a whole lot of consolidation here. We broke out of this consolidation, retested it. Just be careful, because I don't want you to retest this again and get rejected. But the fundamentals, they're shaping up. We're going to look at the investment matrix in just a moment here. Here's Navitas. Oh, yeah. Look at Navitas. And you know what I'm going to do? Where's my line? Draw my line. Move this one out of the way. We're getting close. My target, about $12. But I will say this. This line has had a lot of pivots on it recently. This is Navitas, NVTS. This is how I trade Navitas. There's one line here. I don't need to overthink it, right? See this last time when it broke? That parabolic move? Either we're going to get some rejection, or I want to be surprised with a parabolic move. Be prepared for either or, right? Be prepared for either or. The stock's so overvalued. This is a very speculative play as well. So I'm not going to say that it's not. I like the company. I've done my research on the company itself, but it's way overvalued. A lot of that premium is getting baked in. They got a partnership with NVIDIA about, the gallium nitride type of semiconductor. Was it the 800 volt processor? If my memory is correct. The growth rate's still negative. I have heard, as far as the company's going to have some problems, potentially, in the short term, but I like that momentum right now with RT just getting back above 1, shaping up to be a momentum trade. Shaping up to be a momentum trade here. We'll see how much momentum's left, but this line is very important. As you can see, the candlesticks uses this line almost to a T. So, however the candlesticks respond to that line, that's how I would react to it, right? If it breaks above this line, I'm looking for probably parabolic move to the upside, right? Nice little swing trade to the upside. Otherwise, if we get rejection like we did here, just be careful. All right, let's see what the next one is. All right, here's Poet. Poet's interesting. So we got a little of a shoulder, potential head. This might be too high of a shoulder here. I don't like. No, I'm not liking this. At $7 here. If it breaks below 7, just be careful. I know they what'd they do? Oh, that's right. Didn't they have they just diluted their shares or something, right? Be careful with this one. They do on the photonic side of the semiconductor stuff. I know it says clean energy here. They do more photonics for semiconductors, that kind of stuff. Earnings per share is negative. Growth rate. Look at the growth rate, though. It's still ticking up. It's a speculative play, so just be careful. Oh, yeah. I wouldn't be surprised. Yeah, these are smaller companies here. These are just some semiconductor companies that, have a very interesting way to try to take the space to the next level, either through, photonics or through a gallium nitride rather than, like a silicon-based semiconductor. It's just interesting. But you can see right now, it looks like the retail traders just coming in, right? The values, the growth, the values aren't going to come up right now. They're not selling much. The growth rate earnings, they're moving in the right direction. Look at this growth rate here, 25%. Navitas is negative. So just be careful with these two. All right. Woo. We went over a little bit. Now, just real quick before we head out, you see how UAMY here has an RV and RS, both above 1? That is going to be a prudent style stock. This is an ETF, so they're both 1. This is going to be more RV, less safety. So what would you be if you wanted a little bit more concentration on price appreciation than safety, right? What type of stock will this be? Not so much safety, but you're looking at price appreciation. Anybody know what type of stock that would be? Is that aggressive? Is that conservative? Anybody know? Anybody know? Think about it. You're giving up safety for more upside potential. This is PSIX. It's going to be more aggressive, right? You're giving up the safety for more price appreciation. There we go. Thank you, Alfreda. Thank you, French Mama. Thank you, Dayuper. Yeah, I just want you to, just want to do a simple exercise. Think about it, right? Because I don't want you jumping in stocks that are not meant for you. Yes, PSIX. This would be more of an aggressive style stock just because RS is below 1 and you got RV above 1. So I just want to point that out there. Now, everyone, enjoy your Thursdays. And if you're on the East Coast and the or pretty much, I guess, the whole east side of the country, be safe out there this weekend. I know the weather's going to be crazy. Please don't do anything you don't have to, especially if you're experiencing that ice. Everybody be safe and be profitable. Take care. Bye.